So, hi everyone, we're Team G and we're doing a vied presentation on Carlisle companies. Moving into the industry overview, Carlisle operates in the building products industry with four main subsectors being roofing, insulation, adhesives and sealants, and weatherproofing. The main trends within the industry are re-roofing, which we will speak on later, and then also AI data center demand. And if you look at the graph on the right, you can see the building envelopes industry's expected growth is expected to grow at a 5.5% CAGR, and also Carlisle covers 77% of this market. Now I'll pass it off to talk about comps.
Thank you, Anshul. So now going into the competitive landscape, Carlisle operates alongside three other competitors, Owens Corning, Simpson Manufacturing, and RPM. As you can tell, they are the largest within the space with a $17 billion market cap. If you look over to the right, we have a brief relative valuation comparing the four competitors. So now going into the business overview, Carlisle is a global manufacturer that designs, produces, and supplies building envelope systems for both residential and commercial applications. It has a very large and well-known management team, with its CEO, Chris Koch, being with the firm since 2008 and CEO since 2016. It is split off into two major business segments, and that is construction materials segment, and that deals with around 74% of the revenue. It also involves commercial roofing and building envelope systems. Their second segment is Carlisle Weatherproofing Technologies, which is 26% of the revenue, and that involves moisture protection within those building envelopes. Lastly, I'd like to direct your attention to the graph on the top right. Carlisle clearly has a lot of room to grow, with their total addressable market expected to continue to expand going into the next few years. Now going into our thesis points. Starting off with the first one, we'll be going into our expectations for the growth in the re-roofing market and how Carlisle will stand to benefit from that. Starting off, if you look at the graph on the top left, you'll be able to see overall spending within R&R and its growth, even despite recessionary periods, and we personally expect it to continue to grow going into the future, and Carlisle will benefit from that. Going to the specific drivers of that demand, first off, weather damage and leakage accounts for 65 to 70% of demand within re-roofing, and especially with the rising frequency and rising total cost of these damages, in turn it will likely continue to lead to continued demand for re-roofing. We'd also like to highlight the growth in the new re-roofing cycle that we believe we're entering into. At this point, roofs last between 20 to 30 years, and currently over 70% of U.S. commercial roofing is over 25 years old, and we believe we're currently entering into a new cycle. This is further emphasized in this graph over here, where you're able to see that in the early 2000s there was a large boom in new construction, and we're currently entering into a period where that new construction will need repairment and replacement, and we believe Carlisle will really benefit from this. Now I'll pass it on to Anshul for our next thesis.
Going to the second thesis point, it's about how Carlisle's full building envelope will allow them to take advantage of this increased demand. The building envelope is basically, they don't just do the outside roof, they do the insulation, they do the adhesives and sealants, and even provide a warranty for their customers, locking contractors in. They also constantly improve it, as if you look at the bottom left, you can see some successful acquisitions in just the past year that Carlisle was able to do. Now you might be wondering, what are the numbers like? If you look to the top right, you can see that Carlisle has been able to improve price per roof by 30% in just the past 5 years, which has offsetted lower demand over those 5 years. And with demand expected to pick up, this puts Carlisle in the perfect position. Finally, Carlisle is also big on innovation, with their main two innovations being polyiso insulation and their TPO roofing. This kind of helps them improve margins and really separate themselves from competitors. As you can see, their EBITDA margin has almost doubled in just 7 years since 2019. Now I'll pass it off to the third thesis point.
Yeah, thank you, Anshul. So now moving into our third and final thesis point, I'll be speaking on how Carlisle is in a great position to capture a growing market share in the industry. So starting off, if you direct your attention to the figure on the top left side of the screen, we can see Carlisle's R&R to new construction ratio is higher than that of the industry average. And this is likely a result of their ability to really entrench their customers very early on in the building process and be with them from start up until finish. And a result of this is Carlisle's growing market share in the non-residential replace and remodel space. We did see this market share take a hit in 2023 because of rate hikes, but it's since increased, and this kind of just shows that Carlisle didn't structurally lose any customers as a result of this, so they only have more to gain in that regard. Now if you shift your attention over to the right side of the screen, we can see some demand drivers for the new construction industry. First, looking at the Dodge Momentum Index, which anticipates actual construction by about a year to a year and a half. Some projects that we're going to be seeing in late 2026 to mid-2027 will be very large data center projects like hyperscalers, as well as infrastructure projects like hospitals and airports. And a lot of these projects have very large flat roofs that are exactly suited to Carlisle's product portfolio. Now moving over to the risks and catalysts portion, starting off with some potential risks for Carlisle. Just kind of the nature of the re-roofing industry can be very cyclical, as Laura touched on earlier in our presentation. Second, supply chain risk. If any input prices increase in Carlisle, this could pose a threat. And finally, regulatory risk. Now looking at some tailwinds for the company. First is the residential construction rebound. Second is their Vision 2030 growth plan, just of specific margins and targets that they plan to hit. And the great thing for Carlisle here is that they've already hit several of their targets ahead of schedule. So this is a great sign for investors. And finally, their M&A activity. Now I'll pass it back to Anshul.
Now going into the football field analysis, Carlisle currently trades at around $332, and our weighted average price target sits at $391, and that shows around a 17% upside. We're also very conservative when it came to our estimates with the market growth, their margins, and their price per roof growth, as a lot of the analyst price targets are actually well over $400. We just kind of wanted to show how much room Carlisle really has to grow. Now I'll pass off to Andrew to finish off valuation.
Yeah, we'll be moving on to the bear and bull cases. Starting with the bear case, the factors we considered was a slump in new construction as well as supply chain issues due to the potential Iran conflict, which gave us a weighted target of 306 with about 7.4% downside. Moving on to the bull case, the factors we considered was an increase in new construction as well as continued success in M&A, which gave us a weighted price target of $444 with about 34% upside. Moving on to our sensitivity analysis, the company has a WACC of 7.42%, and for our DCF, we assumed a 2.5% terminal growth rate, which gave us a base case of $382. And for our EV to EBITDA, we used a multiple of 14.1 times, which gave us a base of $399. Now moving on to our Monte Carlo for the DCF, the assumptions we used were market growth, WACC, and terminal growth rate, which gave us a mean price target of 401. And over 93% of our simulations were higher than the current share price. And with that, we'd like to open it to questions.
They've had problems with tariffs and inflation of goods. How do you model that? Are you expecting that to level off, or is that going to continue?
We do expect it to level off. The main issue is the petroleum-based products. However, also for the company, when they, not related to the products, but the products that they send out to their customers, 90% of their revenue is in the United States, and about 10% is split between Canada and Mexico.
So the great majority of their work are repair and replacement of existing commercial properties?
Yes, sir.
What would that, but is it like 80 existing, 20 new, or?
Yeah, it
You had
depends.
something up there, what about?
Yeah, I can bring you back to
Yeah.
the slide, but majority of it within the CCM segment is on repair and remodel, replace and remodel, and then under new construction, it's around 33%. When it comes to their Carlisle weatherproofing technologies, it leans a little bit more towards new construction, but
Okay, so down there it says residential.
yeah.
Are those houses or?
Yeah,
buildings?
Yeah.
yeah, it tends to be like regular homeowners, and then these are commercial properties.
Okay. So they sell their wares to big roofing companies that operate either regionally or nationally? Who are their customers?
Essentially, yes. So about 70% of their clients, they'll deliver the materials on site, and then the other 30% it'll be in stores.
So let me phrase it a different way. If I own a warehouse on the outside of Richmond, and I lease my warehouse to Target or something like that, is Target am I the owner of the building? Am I the customer? Is Target the customer? Or is there a third-party roofing company that I'm going to get 2 or 3 bids from that's Carlisle's customer?
They usually have a distributor as the middleman between them and the end customer.
Okay, yeah.
What is the Vision 2030?
Yeah, it's their goals that they're seeking to achieve by 2030, and a lot of the time it's different financial metrics like achieving certain ROIC or EPS growth. They're also seeking to come up with 10 new products by the end of 2026. As a whole, it's really landmarks that they put for themselves in order to show to their investors that they're committed to bringing more shareholder value. They had the same thing in 2025 when they had a vision in 2025.
What does the chart of the stock look like, if you have one? I'm just curious, is it at an all-time high, is it low?
Yeah.
You know, where is it?
It's not at an all-time high now. It was earlier this year, but then due to the Iran war, a lot of industrials companies, including this one, had a massive sell-off, which is kind of a big place we see value because, like, with Laura's thesis point, like, they're not really projecting for future demand right now. They're projecting, the next year might be a little rough with maybe rate hikes and other things like that. So that's why it's like a big value play because they had a massive sell-off. They're around 408 early in like 2 months ago. Now they're around 331 due to this Iran war. But they don't really have that much exposure, especially to Iran. So I feel like it's like the perfect time to buy them with the way the housing market should be the roofing market should be over the next 5 years.
Did you do a income statement forecast?
Yeah, we do.
What were the margin assumptions going out into 2027, 28?
So we held cost of goods sold steady, and then the ROIC increased by about it went from 25 to 27. It come 2027.
And what was it's a growth cyclical, I guess. What were your assumptions on the top line? Do you think this year is going to be the trough? Or, is it out a couple of years?
We believe it's out a couple of years. This year, the management team did state how the price in roof is going to be relatively muted this year, but they believe it to recover within the next few years. And then also for the re-roofing, we're coming into that early 2000s era of buildings that will need new roofs within a couple of years.
Yes, it's kind of like a perfect synopsis of everything because new construction has slumped over the past 5 years. It's expected to pick up at the end of this year. Re-roofing, like a lot of houses were built in the 2000s, they're going to need re-roofing now. And especially with this Iran conflict, people aren't really looking too far out. It's kind of like everything coming together to like perfectly put Carlisle in a great place to grow.
1 minute.
What are the acquisitions that they've made? It looks like they're relatively small compared to the size of their business.
Yeah, so the three acquisitions they made this year are Classy Fab, Bonded Logic, and Thermofoam. So the acquisitions, it's not like a huge billion-dollar acquisitions that's really gonna like accrete and dilute EPS a lot. It's more just to improve their building envelope. So all of this is to do with just insulation. That's all they're trying to do, improve their insulation. Can you go to my energy codes appendix slide? So energy codes are a big thing, as like with roofs. Look here, energy codes are a big thing. You can look at the graph. They're very different in many different places. So like in colder regions, you need better insulation. So they just made 3 acquisitions just to improve their insulation so they can take advantage of those places. As with polyiso insulation, as I mentioned on my slide, that is the highest margin business in the entire roofing industry. And they, with the 3 acquisitions, can continue to pump this out and really grow and increase margins by a lot more than their competitors.
That's not